The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, as you just heard. My pleasure to be here, Monday through Friday, 11 o'clock till noon. I did do Steve's program today at 9 o'clock. My pleasure to be here also for that, because Steve is away. Very hard worker, Steve, of course, as we all know, and he had to just take some time off for Friday and I believe today. I hope everything's going well, Steve. Pleasure to be here. Don't worry about things. And even more important than that, this is the lineup. We've got programming all the way through. We had Tom O'Brien just for the past hour. Great show, of course, as always with Tom. Tom's back at 4 o'clock till 6 today. We've got after me, Larry Pesavento. You've got Daryl Martin. You've got Dave White. Tom O'Brien comes back 4 o'clock till 6. Just full programming, great programming of all, as always. Dow's up 9 at 15,473. Just the Energizer Bunny. You got the S&P up 0.74 at 1680. You got the Comp Index up a little bit, up 2 at 3801. But it's gold that's actually the one that we're watching real closely, because by any stretch of the imagination, gold should have a pretty decent rally here. The action that we've seen so far is I can only say it's very disappointing. I see nothing about it yet. I will see if gold can have a gap up tomorrow as the dollar pulls back. That'll be very positive. But as it stands right at this very second, it's okay. I certainly don't see a test of the lows at this particular point, not for a little while. But more importantly, you want to be able to see a signal that is generated become a buy signal to a buy mode very quickly. I was in the cell. I'll talk about it in a moment. I'll talk about it right now. GCQ13, and I'm always a little bit behind here on this particular. I'm up 6 to real life. This is up, up 6. Okay. What's really important about this, yes, you got a little mini up channel. But when you look at the, maybe I shouldn't do this. I'm going to go and see if I've updated it. I spent time over the weekend. Did I update this as well? Whoops, not that one. Give me a second. I want to go to the continuous contract just for a moment. At GC. Great. Okay. Now, this is very important. You see way down here, this chart in the middle is the weekly chart. Let me open it up so that I can see what you're seeing here. Okay, let's make it even bigger. Yep, there it is. I'm going to make it even bigger, stretch it out. There it is. Yeah, that's exactly what it is. Someone said to me, yep, we can see your notation, and it's very important that you're able to see my notation. See that Doji PD top on this continuous contract? I'll say the price, but remember the price is smoothed out in the continuous contract, so the date is absolutely important, the high is absolutely important, but the price might be different. Chart pattern remains the same. 1805.50 on the week of the 5th of October 2012. What happens then is it makes that H pattern, the dreaded H pattern that I always talk about. Is it right here? Let me just see the H pattern. Yep, there it is, the H pattern for starts to fail. My seed introducing the Chapman wave methodology. And then what happens, that 9-period moving average, which was fantastic support, becomes fantastic resistance. And it becomes the repellent line rather than the propellant line. And that remains the same right up until we speak, right at this very moment as we speak. And what you want to see is that on the continuous contract, there is a spike above to make a V-shaped bottom, so that the 13, it's a 1283. Let me just double check. 1283 is the it's the same thing. Continuous contract and the futures are at the same price. Great. You want to see a push above 1315. Why 1315? Very simple. The 9-period exponential moving average right now is at 1313. You want to see a close above that level, because it'll be the first time it's closed above that level since the week of the 23rd of November 2012, way up at the 1700, 1762, 1720 level. Well, that was quite a decline. 1179.40, I'm going to put that in, although that's going to change over time because it's a continuous contract, is the low. And most importantly, I should put the date, because the date will never change. That date is the date that will be important, and that's 6/28/13. 6/28/13. 13. Okay. So with that, I just want to explain that in the weekly chart, nice action, but not great action. And you want to see great action at this particular point. Why? Because the dollar, DXY, now I should, of course, go to the dollar continuous, but I won't. I'll go to the index. So the dollar has made either an F or an A in the weekly chart with not very good technicals. The monthly chart actually is not bad at all. But it's the daily chart that went to a peak D. Remember the Chapman wave, you go for the lowest, most identifiable low bar at 80.50 back in June, and then what you want to see is higher highs, and you want to see at least a peak D. And it goes to a D, and then it pulls back under the 9-period moving average, that black line, which was fantastic support. Now the way the fast-moving average acts in the MACD is going to be absolutely imperative. See how stochastic failed, plunges down. The fast-moving average, right as we speak, is just barely underneath the slow-moving average. If it crosses decisively, dollar is coming down, gold should rally. And that should be the test of gold. That's why in my opening call, we are favoring long positions in certain gold stocks and the indexes, because I think that the upside potential, while at this particular point, I have to say, might be limited, I think there's more upside potential right now than downside potential, and it might suddenly pick up when the shorts really start covering. Meantime, for my opening call, we're looking good. We've got some cyclical stocks, some Dow-type stocks, Dow stocks, in fact, and Dow-type stocks, and they are participating very nicely here. One that we just picked up the other day is up very nicely on a percentage basis. It's up, even today, it's up 0.73 when the general market is absolutely flat. That's what you want to see, relative strength. Now, I had two questions. One of the den was, would I look at a couple of things, actually. LDK. LDK is, in fact, a semiconductor stock. It is trading at 1.64, up 20 cents. Huge move, 13.96. Horrible monthly chart. Just finally trying to find some kind of a base. So let's skip the monthly, but the weekly chart is fascinating. Why? Because this candle that we're looking at that hit 2.17 back in May, the week of May the 24th, that had a low of 1.47. If at any point in the next week this is a story stock, and it goes into cycles of storytelling. When I say that, it means that it's like a biotech stock in some way. LDK, this is a solar company. I think they're involved in the semiconductor part of the solars. I might be wrong. But most importantly, what I'm looking at is a very strong leg D up today. Gaps up over the 200-period moving average. It needs to clear, and this is going to be tough. It needs to clear 1.76, the high of May the 30th. If it does that, immediately 1.79, the high of the 28th, becomes a target. That's not the point, because if it starts to climb from here, it's for the very first time I see the potential for it to go to the high of 232 back in January of this year. Let's do one step at a time. This is leg D. Leg Ds are notorious for failing. If they succeed, it's very positive. It's even a new leg D up in the 120-minute chart. The major support is 1.60, 1.60, the 200-period exponential moving average. A close below 152 will say, be careful, because 144 is going to be the most important support level to watch. If you're in it, congratulations, fantastic move. My recommendation always in the case like this is you look to your left side, high bar, clear that 165 level on the 10th. That's great. It has to close above that 165. 165 is the high. 165 hasn't cleared it. It's double topped. It needs to clear it. And that'll be your sign to say some part of your position can now have a stop, maybe 15 to 20 cents below. It depends where you got it. Let's say 15 cents below. And the core position can stay. And if it really starts to scream into the 1.70s, then I'm going to recommend that trading stop that you have, just keep the trading stop. And then the moment it starts to get into the 170s, just prudence would say take something off, because it's a spectacular move for a very low price stock. But in the meantime, it is acting well. The day is so young, by the end of the day, it could be at 140. Who knows? But right now, it's acting very well. Money management is your way to play this. You want to keep a core position. I would not take a loss on the core position. Let's just make it simple. If you got in today at the opening, because it gapped up over leg C, so you knew it was peak D, a leg D unfolding, then all I would say to you is don't take a loss. Why? Because if you take a loss after being up so smartly, not only is it psychologically debilitating, but you're going to see a real quick move down to the 130s, and then what do? You're just stuck. So be careful. Okay, next question was, please look at, did that. That was from Mike. Next one was TNX, the 10-year yield. Now, IEF, and I hope I remember that. IEF, IEP, IEF. Yep. The IEF is the iShares 7 to 10-year Treasury bond ETF. Now, what's fascinating about this whole move down in the yields, no, what's fascinating was the whole move up in the yields lately has been that a number of aspects in the 10-year have been, there was a left side, right side price time match, was a bit delayed, 2 weeks late, but it went slicing through the left side low bar of the 10-year yield at 101.77. Let's call that 1.01%, and it went right down to 1%, 100.45. Let me type that in. Now, the rule of this particular technique is the large arch. Can't even remember what I wrote, but I'll type it in. Well, a large arch formation should bounce right back into the arch, and how long it stays there is going to be very important. So let me just do this real quickly. And I do want to take calls at 877-927-6648, but I'm going to show you something here for, these are the charts. I didn't send it out today. In fact, I kind of forgot, although I did work on it. Most importantly, look at this. There was a mistake. Last week, there was a bad tick, and I forgot to type in what the tick should be. Let me just see if that's corrected. I don't think I can do that. Let me go to the TYX 120-minute chart here. TYX. And that, yes, that high was, in fact, 3703. There was a misprint. I meant to call TradeStation. They're usually very good at this. 3707. Oh, they did. They corrected it. Okay, 3707. So this is a lower high bar, which says we could be making a peak B this week in the yield. That's the 30-year yield. The 5-year yield, 86. No. The 10-year yield needs to make a lower high this week. Below 30. I'm sorry, 2725, 2723. Oh, yeah, same thing. So the 10-year has made a peak B. The 5-year has made a peak B, and I think there was a mistake. I've got a feeling that there was no high bar, no higher high bar in the 30-year. I suspect, and I'd said that 3 weeks ago, that I thought they were coming in for a peak B in the weekly charts. I'm kind of convinced that that's the case. So I'll talk a little bit more about that, as well as a question on AUY. That's a gold stock, and we'll look at that as well. I'll be right back. Basil Chapman, 877-927-6648.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and Monday through Friday my service is the opening call. We have a number of mostly long positions. We have one short position. More, I wouldn't say it's an experiment, but it is a stock that had shown a particular pattern that should remain weak. So far it just hasn't broken out, which is a positive, but the weekly chart is holding that 9 EMA, so we're watching it closely. But it's a small position, pricey stock, triple digit, and we've got just the tight stops, buy stops that is. But so far the longs are working out very nicely. Now, most importantly, when we're looking at charts, if I go to AUY, which is Yamana Gold, there's a peak F in the Chapman Wave methodology, a peak F top, the sixth highest peak. That is the one, the fifth or sixth highest peak. Man, I tell you, if that starts to come down, you got to be real careful. Now, when Yamana came down in 2008 from the 1992, 19.92, yeah, we got 19.92 level. Zip in the Den asked about this. It plunged and went all the way down to like $3. What did it go down to? $3.30. And that was in like a lightning rod. It goes down sharply and then up and then fails and it comes zooming down, actually extended to the downside. Well, it went up with ABC, then it pulls back, and it has another move to the upside, goes DE, pulls back, stochastic, MACD just touches the 9-period moving average, the stochastic pulls back sharply, and then it makes that M pattern, and the M pattern says, okay, you can go one more time, and it goes to a top, and that top was at, I think it was just on 20, let me just check, 20.59. 20.59, that was back in 2012, and then what does it do? In a single move, in a monthly chart, not once did it make even a peak A minus that is. It just goes down, 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 down. 1, 2, 3, 4, 5, 6, 7. 7 months of declining prices, and then it touches the 200-period moving average yet again, which has been a fantastic springboard, and it's bouncing up a little bit. The MACD and stochastic are lousy. No, let me put that in perspective. The MACD is still expanding, and the stochastic's only at 13%. So it is not lousy. It is horrible. But the weekly is starting to flatten out, and that's what happens. Think of a super tanker. The super tanker cannot make a turn very quickly. But what happens is you turn the rudder. As long as you're accelerating, the rudder will do its job and start to move the back a little bit, and the nose starts to point. And if you had to measure the move from the back from one point of I can't call it contact, but one point of reference to another time frame point of reference, the back will have moved a lot. Well, you might not find that the front has moved all that much. Why? Because it's still that fulcrum is way up near the front. If it's a speedboat, the fulcrum will be right at the tush, right at the back, so the nose will just swing around. So think of these gold stocks, many of them as being super tankers after such a fantastic move. Now look at the weekly chart. The weekly chart says, oh, man, could I only but close above the 9-period moving average for once since I broke down back in November of 2012, back in the 18 and 19s. I've already hit a low of $8.55. That is a huge move. So it is attempting, as we speak, to try to get something going. But look how horrible those candles are. There is nothing there. Stochastic's flat. The MACD is just barely moving. Now you get to this is the rudder itself. That is the 120-minute, that is the daily chart. I could pick up the 120-minute chart, but there's also nothing there. So it's going to have to be a news event that turns gold. Gold has to suddenly spike a lot. I'd say more than 20 to 25 points overnight to come in. And then you will see something happen. The daily could have a gap up. That will make for an island reversal. I'll circle it. I won't circle it. I'll rectangle it right now as a potential. Only a potential. But in the meantime, it's making the H that could turn into an M pattern. I'm a little concerned about these gold stocks. I know that I'm trying to get in. We've already been in some. But I'm trying to get in. And they are not participating the way they should. Oh, a couple are, but most of them are not. So if you're in AUY, Yamana, I'm going to suggest that if you are in it, I think there's more time than price, although a 10% correction to the downside is not fun, but it's more time than price. It's got a little gap, and I would only say that if it closes under $9, it's at $9.73 right now, $9 in the next 3 days. I wouldn't want any part of this, at least not for now. I'd rather buy strength than buy weakness. And at this particular point, if you're in it, I would only add if it gets into the gap with a low of 1032, and it's at 973. It has to get into the gap and hit that candle of the 19th, and then I'd be interested in this. So far, maybe a nibble, but...
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Let's do something else, AMBA. I'm going through the Investors Business Daily top 20 stocks. I love to do that every weekend. And I'm going to show you something here. This is stock, it's called Ambarella Inc. Of course, I should know what it is. I don't know what it is. Ambarella Inc. is, in fact, design systems on a chip semiconductor processing solutions used in cameras for security and surveillance markets. I like that. I don't like it. I just like it as a potential. There you go. Okay. As a potential sector that is has a lot of upside that I can see. So this is what we're looking at here. I'm just finishing up my notation, Chapman wave notation. There we go. A, B, I don't think that's C. Is that a B? 48? 48, double top. Okay. So this chart in a monthly is in leg B. possibly going to make it a peak. B, if this month there's no new high above 18.58, but it's only it's at 1761, just a point away. It's made a potential peak F in the weekly, and that could recycle. That could, in fact, turn out to be a B, and then it could go to a C. Any new high, and I'm calling it a C, not a G. But there's nothing to do. You see, in the Chapman wave, you do the analysis, and every once in a while you get something that has an alternate wave count. Your objective is to, if you're in the long side, is to stay in position as long as possible. If you're looking for a short, it's not to be early. And right now the stochastic's at 80%. That's good. And the MACD is still okay. Not great, but it is positive. So there's nothing really to do. And the daily is saying that last high of AMBA trading at 17.64, down 13 cents, the high of 18.58, and the pullback to 15.50. That was a big pullback in percentage terms. Now it's making what I call the inside buy mode, A to B, and I should call that gray A to gray B, gray beard. And you've got C, and it should make a D, and the D should be at, just under, or just above the previous high of 1858, and then a tremendous amount of information gets imparted. So that in this regard, what I'm looking at is that it is really not a buy and it's not a sell. If you're in it, you stay in it, you want to raise your stops. I love the monthly, but the weekly, the daily is saying, be a little careful here. I'm kind of struggling. The weekly is saying, I've got this bar, long-legged candle bar of June the 21st. I think it's going to be resistance even if we go fractionally above it, and we should come back into the trading range around about 1730 to 1740, somewhere in there. But the monthly chart is very positive. How do you trade this? I think you trade it by having two things. One is you either have a lot of patience and you wait for a pretty substantial pullback down to the low 16s, maybe the high 15s, number one. Probably even a little lower. Or you start a position right now in case it's just so restless, it wants to continue leg B, and it wants to keep moving up. But this small position has to have a much larger stop. You have no choice, because you know you're buying it at a point where it could pull back, and if it pulls back, it could pull back, not big deal in points, 1.5 points or so. Hey, that's a big deal in percentage terms. So that's my thinking. This is a stock that I'd like to put down here, and I'm going to put it down not on this page, not on the next page, but much later on. I'm going to put it down where I've got another stock written down. So this is AM. Always write it clearly. I usually smudge these things, and I say, what on earth was I writing there? AMBA, Ambarella. Sounds like a spaghetti, right? Ambarella Inc. So what we're looking at is a very strong monthly chart. It's on my watch list, and I like the fact that it's in security cameras because I think we're going into a phase that's going to heighten securities. I'm not going to get into the politics of anything going on right now other than to say thank you, media, for always being the ones to create an issue out of anything. Now, let's go to the next step. And the next step is we're looking at this chart, and it's got a U-shaped pattern, but it's walking the 9 EMA, which is 16,978 on the weekly chart, and that is the support. And the most important thing about that is you start to close 3 times in a row, or 3 out of 4 times consecutively in the weekly, and you've changed your direction completely. If it starts to go underneath 16, it's called a 1666, closing underneath it. Well, let's look at another one, AVG. I don't know if I've done this one because I lost a lot of charts. I haven't done this. We'll do this one together. AVG, same thing. Oh, this is very interesting. Monthly chart also in leg B up. Very strong. This is still in leg B. And AVG is AVG Technologies. AVG Technologies. NV, that means it's a foreign company. And it is into develops internet mobile security again, performance optimization, backup, identity protection, and family safety software. Oh, isn't that interesting? I'll type that all in later. What I want to do is to go to the weekly chart and show, always slide back to the lowest, most identifiable low bar. And there it is. So what do? We go peak A, up arrow, peak A, peak B, peak C, peak D. That's where you expect the sharpest pullback, longest in time, and lo and behold, that's exactly what you get. Now what we do is we go peak A again, peak B, peak C, and it's in leg D. Leg D. So once again, we go to D. That's where you got to be careful. MACD is strong. Stochastic's just dipping, but it's at 92%, and the MACD is still good. Hey, that's a good weekly chart. So now let's go to the daily, because you've got to look at these different time frames. You don't look at time frames, you might be swimming beautifully with the tide in the short term, but the next tide is telling you, please be careful. There is a riptide coming. You can't see it because you're in the wrong time frame for checking out. So A to B to C to A, B, C. That's a D. That's an E. Now what have we got? We've got an A, B, C, D, a recycle, or is this an E to an F? I'm going to call it, for now, E/A and F/B. And I'm giving a little emphasis right now on the F, not the B, because the way the stochastics pull back to 70% and the MACD is flattening out says there's some internal stress left that you're going to have to show me. You're going to have to prove it to me. So this stock, AVG, trading at 20.99, AVG Technologies, the way I've notated it, says longer term, fantastic stock. Got to keep it on your radar as a stock to buy. Where would I like to buy? Here, I'd have trouble buying it at this particular point. Wow, I shouldn't say that. There's nothing wrong with the weekly chart. What would I do? I'd go to the 120-minute chart because that's going to give me more information. Yep, taking time. So that's an A to B to C to D, A to B to C to D. So it keeps making Ds. That's very good to know. And the most important thing is that the last D was the biggest and longest decline. Says, yeah, you've got a little patience. You've got to hold off now. If you're going to buy, the safest place to buy would be below 20. It's at 20.99. Safest place to buy would be round about between 20 and 19. 19.26 is the 9-period exponential moving average, but it might not get there. So what I'm looking at is a stock that says it's in a very strong buy mode in two time frames, the monthly and the weekly. The daily has been, but it's pulling back. It's holding very well. What would I do? Oh, that is so tough. It depends on my portfolio. It depends on a lot of things. If I had the money, and I was saying to myself, if this market continues higher, those top 10, 15, 20 in the IBD are on fund managers' portfolio add-on lookouts, many of them. This is one of those stocks that could move. I would take a small position right here, 21, and on this small position, I don't think I'd want it under 20.24. I'd rather wait for it to consolidate. So a small position with a stop of 21, a stop of 75 cents. And if it takes that out, I'm done. I'm waiting. I'm having patience for the weekly because the weekly chart will probably then make a peak D, and I need time just to see it consolidate. I just wanted to show you how I go through these stocks, why they're on my list, why they're not on my list, why they can be on my list, and then I forget about them because they've done nothing for a little while, and then I don't take them off the list. I just forget to look at them, and then they might start their move. And a question about DGI. DGI. Now, let me just quickly check here to see if I'm not skipping. Yep. Oh, we've got a caller. We've got Bob in Rumson, New Jersey. Hi, Bob. How are you?
Good morning, Basil. How are you? I'm fine.
I'm very good. Thank you.
My question is TD Ameritrade, AMTD.
Yes.
I have no position, but it caught my eye. I show it as an area D or leg D in all three time frames.
All right, give me 1 second. Let me just quickly do the monthly here. I had this one done. I had this done for a very good reason because in every buy mode I've ever had since I begun trading from way back in the 1970s, I would always have a brokerage stock. But for a while, quite a while now, I've not done that because they've been all over the place. It used to be that you could buy Merrill Lynch at the beginning of a new buy mode in a bull move, and just sit with it for a long time. But it hasn't been like that because these guys have been sort of misplaced for some reason. But the last buy mode back in December, what was it? Back in September of 2011, you see, even here, it went from the 12s up to the 19s, and then it had a really sharp decline back to the $14 area. Those are sharp declines. Now it's broken out. So AMTD, TD Ameritrade Holding Company, lagged up in the monthly chart, broken above, well, the month's not finished, but so far it's above the 2587 high of January of 2006. The weekly chart is, in fact, go to the lowest low bar always, and that's, of course, is a little complicated. 1459, 1464, and 1470. Yep, that's the way I thought it would be. So we're going to go like this. A failure. Restart. A, B, C, D. And then what we get is, this is very interesting. I'm going to call that, I have to follow the waveform. So this is an E and an F. But there is a chance of a restart. So give me 1 second. A to B. So you got a D. Then you called it A, B, C, D. Did you go from the instant restart in the weekly chart to get the D? That's from the high of 18.52 back on the week of the 11th of January. One bar pulls back, and then it starts a brand new move. Then I would also get D.
Yes.
Okay, so I'm going to, in fact, I'm going to agree with you, but I'm going to actually put B/D rather than D/B. And the reason being that it's 94% in the stochastic and flat. It's not showing signs of weakness, and the weekly chart is very good. And the doji candle is going to be so important. The doji from last week, which I'll talk about in a moment. Let me just double check on the time. Yep, we've got time. Now I'm going to go to the daily. A, B, C, D, E. This is going to be interesting. I'm going to do that again. I think I did a little quickly. No, I'm fine with it. Oh, A, B. Missed it. I knew I missed one. Sometimes just the look tells you that you got to. I have a
PD on July 11th.
Yeah, so let's do this. 21 to 20. Excuse me. July the 11th. I've got it on May the 14th. I've got D. And then it goes. Okay, I'm going to stay with this one because I'm very comfortable with it. A to B because it was going to higher highs even though the technicals were failing. C, D. I've got an E. So I've got an E on the daily. And I think you might have missed one. There was one that was just, I don't know if you do it automatically or not, but there was one that was just 1 penny, I think it was, to make a peak. In fact, I'll do it now. Look, I've got the low bar, the doji. I love these doji candles of the 18th of April. That's the low bar. That starts your buy signal. And then what does it do? It goes to peak A. That was on the 25th of April at 19.89. It goes to peak B at $21 on the 3rd of May because the next day is 20.97. 0.03 makes a peak. But then what does it do? It goes to 21.04 and 20.99. So that's peak C, and therefore you get a D at 22.89. Now the big question is, do you want to take that as an E or an A at the top of the 29th of May? The more I've done this over the years, the more I've come to the conclusion that if you get an E/A and the technicals fail, but the price holds, and then there's like a brand new buy signal because it keeps going to higher peaks without coming back to the low, it's incumbent upon you to think of that peak that was an E/A as an A, and you've started 2407 is the high on the 29th of May, 2420 is the high of the 10th of June, B, then you go to C at 2443, and then you go D, and now you're in leg peak E. So I'm very comfortable with that. Now we'll talk about, did you say you do or you don't have a position?
No, I don't have a position, but it caught my eye as a possible short, except the technicals are very strong still.
Yeah, that's what I was going to talk about. In fact, it's worth talking about this because that candle of last week is very important. We'll be right back with Bob straight after this break.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Nowhere, spelled N-O-W-H-E-R-E. At one point, we've all been there, whether it be our health, career, or our finances. Some might be there right now. So where are you when it comes to your trading and investing? Better yet, where would you like to be? The good news, I can take you from nowhere to now here right now. Same letters, N-O-W-H-E-R-E, just a totally different emphasis and focus. Hi, I'm Steve Rhodes with TFNN, and on July 25th at 6:30 p.m., I'm going to share with you a trading strategy that I began on May 10th when the S&P was at 1627 and closed at the same price 8 weeks later. That's right, the S&P went nowhere versus a trading strategy that produced a 100% hypothetical return in that same period of time, and it's now here for you. Subscribers to my daily newsletter service, Mastering Probability, have free access to this exciting live workshop. The trend is your friend. All the details are on the homepage of TFNN.com. Decisions shape your destiny, and your trading destiny is now here for you.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. We're looking at Ameritrade TD. It is trading at 25.96, up 3 cents. Bob in Rumson, New Jersey, is looking at it with a possible idea of shorting it. Bobby, if it's going to be a short, then it has to be a quick short. And I'm not yet sure. You see, I don't have a sell signal yet in the Dow or the diamonds or the SPY or the S&P, and the Qs are in leg B extended today. IWM leg B extended today. I'd be hesitant to short it for only that reason. On a technical basis, it looks to me like the doji candle that we're looking at from last week, a close above 2654 would be very positive because it raises the base at least short term, or weekly basis that is, and a close underneath 2512 would be negative because it would immediately indicate there's going to be a test of the 24s into the 2435 9-period exponential moving average. If the Dow doesn't close down today, but instead closes kind of unchanged, just maybe down a small portion, you can see that the buying is constantly coming in. If the Dow starts to move sharply lower, then watch Ameritrade, because if it closes underneath the low of the day, underneath 25.86, you've got yourself a quick short. But to tell you the truth, until I get my signals, I'm looking at this more as a potential buy on a sharp pullback than a short. And the only reason is my technicals are suggesting that we will make a higher high this month in July in the Dow to start leg D up in the monthly chart and leg D up in the S&P. That's my guess. But I don't... My thinking is from your tone of voice that you were really looking for something fairly substantial in time and price, not just a quick trade. If you're thinking of a quick trade, I'd say, hey, put it on right now. You can have a 35-cent stop. If that doesn't get hit today, probably tomorrow it'll gap down and you'll be looking good. But you were looking for something a little bit more substantial, right?
Yeah, well, I really wanted to talk to you about the technical aspects of it. My interest level in doing it's not that high, really.
Okay.
But, you get a lot of stocks that are in area D or leg E's or whatever.
Right.
In other words,
Right.
high up. And so, you're the expert, and I wanted your opinion really more so on the technicals, and just so I have a flavor, am I thinking along the same lines that you are?
Okay, so you are thinking along the same lines for this particular stock. And if you're looking at my charts on Tiger TV, you'll see this is the 120-minute chart, and the MACD could very easily deflect lower, and the stochastic's only at 56%. That's why I'm saying that it could make an arch formation. And you know that one very well. That's the H formation. And if it does, then where would the target be? The target would be on the downside first of 25.46. Big deal. So that's 50 cents lower. But if it takes that out, it could retest the low of 25.12. Then it gets to the 24s. So on a very short-term basis, that's the way I would look at it. But I'm seeing it holding up when the technicals are down. That's usually saying, hey, I've got a little bit more room on the upside. It doesn't tell you how much, but it does tell you that it's got some room on the upside. So I don't see it as the ideal short. If you're looking for some shorts, the ones that I'd be looking at right now are perhaps some of the biotechs that have really run their course, starting to look a little bit weak, even though there are a couple of biotechs that are holding up very well. And I'd be looking at more of the areas that are maybe the food area, maybe the Paneras, etc., although I have to do a little bit more work on that. But the ones that have had a spectacular move, sharp move down, and have retraced and look like the 120-minute chart, except they're on the daily. They've got that kind of pattern. Those are the ones that I think are going to turn out to be. Panera right now is acting quite well, but it has the potential to pull back. There are some stocks, but it's kind of tough. I'm not getting a unison.
It's a strong market.
Right. This is a stock market of stocks, and a lot of them are still acting quite well. So thank you so much for your call, Bob. I do appreciate it. Folks, stay tuned for Larry Pesavento and great program all the way through the afternoon. I'll be back tomorrow.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.